Hey everyone, it's AJ Stockwell. I'm a licensed CPA and small business accounting and finance expert, and in this three-part video series, I'm giving you 15 tips that will make tax season easier next year. So these are things that you can start implementing in your business today and over the course of this year that will make tax time less of a headache next year. Because I know a lot of people right now are scrambling to get their taxes done. You know, it's early April, that deadline is coming up, and it's a nightmare for a lot of people. So I don't expect you to implement all 15 of these things that I'm suggesting in these videos, but if you can pick a few and implement them in your business, I think that it will really help out. So if you haven't already, make sure that you subscribe to my channel, and that way you get all of my videos and you don't miss the other ones. So this is part 2 of this 3-part series, and I'll link to the first video in the description below. And then when I upload the third video, I'll add that to the description as well. So in the first video, I gave the first 5 tips, and we're counting down from 15. So this is going to be tips 6 through 10. So jumping right in, number 10 is to keep your business and your personal finances separate. And the most important way to do this is to have a separate checking account and credit card for your business. If you aren't using a business checking account, or at least a checking account that is only used for your business, then it can become a nightmare when it's time to do your taxes, because you're going to have to sort through all of your different transactions and identify which ones are business and which ones are personal. So it's really important to keep those separate. So most banks nowadays have a business checking account that is either a really low fee or has no fee, or at least you can avoid the fee by keeping a certain balance or something like that. I would recommend looking for an account where you do not have to pay a monthly fee, because nobody wants to pay bank fees. And then it's really easy to find a credit card that doesn't have an annual fee. There are a lot of great business credit cards out there that don't have annual fees. So again, keeping your business and your personal finances and transactions separate will go a long way to making tax season a little bit less of a headache if you aren't already doing that. These next 3 items aren't exactly bookkeeping related. They're kind of bigger picture business strategy related, but I think that they're still really important, and they still will really contribute to your business's strategy over the next year and optimizing your energy and your sanity for the next year. So the first of those is to evaluate your product and service offerings. So if you've ever heard of the 80-20 rule, it talks about how 80% of results often come from 20% of inputs. So what this might mean is that 80% of your revenues or your profits come from only 20% of the products or services that you sell. It can also mean that 80% of your headaches come from 20% of the products or services that you sell. So I recommend that every business owner each year takes a step back and evaluates their products and services that they're offering, and do that kind of 80-20 analysis. You know, what is really contributing to the profit of the business, and what is sucking away your time, your energy, your attention, what's causing stress, and that kind of thing. And if you find that something is really taking a lot of energy and causing a lot of stress, but barely contributes any of your profit, then it might be time to stop selling that product or service. The next thing to evaluate in this way is your vendors that you work with. So think to yourself about what makes a great vendor, what makes a great vendor relationship. You know, there are probably vendors that you really enjoy working with and speaking with, and who are flexible with you and willing to work with you. And then there are probably vendors who you don't like working with. Once again, I would say do that 80-20 analysis. You know, who are the 20% of your vendors that are causing 80% of your headaches? And if you don't have to work with them, then is it really worth continuing to work with them? This is something that is important to review each year. The next item, the third one that I'm talking about in this video, is to do the same thing with your customers. So evaluate your customers. Think about what makes a good customer. You know, it's really important for any business owner to take a step back and build a profile of their ideal customer or client. So if you're a bookkeeper or an accountant, what does your ideal client look like? What industry are they in? How big are they? what do the day-to-day interactions with them look like and feel like? It's important to identify what makes an ideal client and do that 80-20 analysis to see if there are 20% of your clients that are causing 80% of your headaches and stress. Now for the fifth tip of this video, we're going to go back to bookkeeping, and I'm going to suggest that you review your open customer invoices. You know, one of the biggest areas that I see that needs cleaning up when clients come to me to clean up their books is their accounts receivable. And when people email me because they are trying to clean up their own books, they also talk about accounts receivable. And they talk about a bunch of open invoices or a big balance in that undeposited funds account that QuickBooks makes. It's really important to keep an eye on your accounts receivable balance and keep it accurate. The best way to do this is to open up the accounts receivable aging summary, which is a report that QuickBooks provides, and I talk about it in my QuickBooks training course. Basically what it does is it groups your open customer invoices according to how late they are. The first column is going to be all of your customer invoices that are still current, so they aren't past due yet. And then the next column will be up to 30 days past due, and then the following column is between 31 and 60 days, and then to 90 and beyond. So it's important, especially in that more than 90 days past due column, it's important to look in there and see if those are valid invoices that should still be on the books. And then you want to decide, do I want to try and collect payment on those, or should they be written off? Usually when CPAs have to clean this up themselves when it comes time to prepare tax returns, it can be a really expensive and time-consuming headache. On that same note, I'm going to give a bonus tip in this video since 3 of those weren't really about bookkeeping, and this is going to piggyback off looking at your open customer invoices, and that is to look at your open vendor invoices and the accounts payable that you're still carrying on your books. This is another area that people don't often clean up and can really get messy over time. There's a very similar report called the Accounts Payable Aging Summary that shows all of your open vendor invoices according to how past due they are. And I would recommend, again, looking at these and seeing which ones either do still need to be paid or should be taken off of your books. So there you go. That was 6 more tips that you can start implementing today to make tax season less of a headache next year. If you enjoyed this video, please do give it a like, hit that thumbs up button below the video, and don't forget to subscribe to my channel. I'm looking forward to telling you the last 5 tips in the next video.